Hello, everybody, and welcome back to episode 10 of my investment journey. Yeah, we have a little anniversary today, episode 10, and we're cracking the 5 figures today. And so, as always, I'm going to start with my trade, and afterwards, I'd like to discuss a topic that I indicated last week already in the outlook for 2026. And there's a lot going on this year that we can expect. AI is one that we will talk about in the future. But this time, I want to talk about global conflicts, wars, and how you want to deal with it when you invest, and how I deal with it when I'm investing. But before we get to that, let's make the trade. As always, I'm going to invest in the MSCI emerging markets here. I have €1,000 ready, and I'm going to invest 1,000. Let's review the order. That seems all good. Buy now, and boom, we got it. So let's see if this worked. Yes, there we are. We are at €10,491. Yeah, it's pretty cool. You see how the market developed. For the longest time, we've been hovering around the zero line, but really, it was this first week here in 2026 where we saw a bull run. So I don't expect this to continue, but hey, I'm not complaining. I always say if the market goes up, I make a profit. If the market goes down, I get a new opportunity to buy cheaply. All right, with that being said, let me move over to my market dashboard to check how the markets have developed last week. All right, and what we can see is that all the markets almost that we're looking at, they are up significantly, and they often reached an all-time high. So it's a great start to the year. I won't even go too deep into any of the countries here, just checking some of the main stories of the week now. So the US stocks rallied to start the year, while investors largely looked past mounting geopolitical tensions. So interestingly, this is one of those weeks where not AI dominates the news, but geopolitics, and it's very interesting and we're going to talk about it. And here also, aerospace and defense companies were hurt when Trump said he will not permit them to pay dividends or repurchase shares unless they accelerate production of military hardware. And then the next day, the defense stocks rallied after Trump said they were going to increase military spending. So yeah, it's all about geopolitics this time around. Meanwhile, economic data, bit mixed or negative. December job growth moderates, and for October and November, the job growth figures were revised lower. Manufacturing is weak, while services remain resilient in the US. Meanwhile, Europe showed a very positive week. The stocks ended higher, driven by optimism about the economy and corporate earnings. And so representative here is Germany. We see here German revival and stronger Eurozone economy. Germany may have turned a corner. Nice. German output increased by 0.8% rather than shrinking 0.5% as predicted. So that's perfect. That's super nice. Meanwhile, of course, inflation remains high, and that's something that the European Central Bank keeps an eye on. They worry about it and they say, hey, the rate cutting is certainly over now. Then we have Japan. Japan posted strong gains. Investors also looked past the trade tensions between China and Japan, and it's really tech companies that led to the rally here, supported by the weak yen. So investors are concerned about the government's massive spending plans, and that impacted the yen, but of course a weak yen supports exports. And the central bank says it will keep raising interest rates in line with improvements in the economy and inflation. And lastly, here we got China. So the stock market gained again, here fueled by AI. But the economy in China has its problems. And here it is, unlike most Western countries, China struggled with deflation since the end of the pandemic. So deflation is often worse than inflation, as long as we're not talking about hyperinflation. But deflation is very bad. And it's driven by the prolonged housing downturn and overproduction in China. So there are certainly warning signs in China, but so far that didn't negatively impact the stock markets here. All right, once again, I tried to summarize the week, and The movie title of the week would be Rally on Shaky Ground. And yeah, in a nutshell, it's global equities surged as investors shrugged off geopolitical risks and they remain optimistic despite some weak signs of the US labor market. Europe and Japan showed improving momentum. China rallied on AI enthusiasm, even though they have deflationary pressures. But with all that being said, I want to switch to the one story that seems to dominate early 2026, and that is geopolitical risks and tensions. So I want to talk about some of the conflicts all around the world and how these could cause rifts in the economy. And of course, for you, what to watch out for and how you want to deal with it when you're investing. Spoiler alert, the situation for you is too complex to predict anything, and ideally you just follow the existing approach that you followed. Now let's look at the map and talk about some of the conflicts going on. First, we got the top story that I'm sure you're all aware of. The US attacks Venezuela and captures President Maduro. On the surface, this was part of Trump's war on drugs, where Venezuela supposedly plays a key role. But he also didn't make any secrets out of the fact that oil plays a role, and controlling Venezuela with the largest proven oil reserves in the world definitely has its advantages. In general, Trump didn't want a country in his backyard that is openly hostile against him and hosts enemy actors from China and Russia to Iran and their proxies Hamas and Hezbollah. Now, all of this might not have the biggest impact on the global economy, it's more of a slap in the face of Russia, Iran, and China. They, of course, predictably criticized the US, but I don't think it has a big impact. I mean, Russia wasn't waiting for this attack to feel legitimized to march into another country. They'll do it anyway if it seems opportune, and in fact they've shown that when they attacked Ukraine. Will China feel legitimized to go after Taiwan? I don't think so, but we'll get to that. So overall, I don't think it's a big deal for the stock market. Next, we have Russia and Ukraine, the one that's been going on for almost 4 years now. Russia assaulted Ukraine and indirectly the entire Western world, especially Europe. I think the risks around this conflict are substantially lower now than they have been at the beginning of the war. That's when Europe was still much more dependent on Russian oil and gas, but since then, Europe has found alternatives and cut many ties to Russia. Now the war has seemingly turned into a war of attrition, with the front line not moving much, or at least not very fast. It seems as if there's a stronger push now to make a peace deal, and as it seems to me, Zelensky might even be ready to make territorial concessions. Russia, I believe, will accept a deal that saves face for Putin and allows him to sell this whole thing as a win. The main thing here is that he's pragmatic and he doesn't care about his people. That means he'll sacrifice another 100,000 soldiers if it helps him to make some ground. The only thing that makes him give in my opinion, is a credible threat or credible permanent support for Ukraine. If he understands that he cannot make meaningful progress on the battlefield and Europe and the US are firm, he'll be pragmatic and go for a deal. The bigger issue is that this conflict really exposed some rifts in Europe when it comes to the question how to deal with Russia. And Russia, of course, fans the flames with hybrid warfare. On the positive side, it was a slap in the face that Europe needed to stand together stronger, build up defenses again, and understand that they're stronger as a union as opposed to a fragmented collection of small countries. But I think all of this will not create further chaos in the markets. Then we have the Israel-Palestine war. I also think this one is effectively over and won't impact us much. There was a deal, and even though it isn't 100% peaceful yet and much conflict remains in the region, the hot war seems mostly over. And also the public support that we see as protests in the street has clearly died down. So this conflict I don't think matters much anymore. Of course, everything is connected somehow, and the butterfly effect is a thing. Israel has severely weakened Hamas and Hezbollah, which are proxies of Iran, and thereby has weakened Iran. Iran now has to deal with huge internal protests triggered by the economic situation, but surely also related to the fact that the Iranian leadership sent so much money to Hamas and Hezbollah instead of spending it on their own people. And if the Iranian leadership falls, it would also hurt the anti-Western alliance, including China and Russia. Iran has supported Russia in the Ukraine war, including among other things with their drones. So if the war in the region flames up, it could have implications all the way into Ukraine and Europe. But I don't think this will happen. The countries in the regions have enough problems as is, and I don't think any of them, from Saudi Arabia to Iran, would want to get pulled into another hot war just because of some poor suckers in Gaza. Sorry. Then we have a bunch of other regional conflicts. We have a brutal war in Sudan, lots of bloodshed. We have ongoing conflicts and famine in Yemen. Syria isn't super stable. And there are surely various other ones. These, I believe, are local conflicts that will remain local. There are usually some foreign powers involved, such as the UAE, Iran, Turkey, Saudi Arabia, sometimes directly and more often via proxies. I see this as regional power struggles with immense human suffering, but nothing that will shake the world economy. So for most of us, there's not much we can do about these tragedies, although it's good to keep the spotlight on these conflicts and the perpetrators. And then we have potentially the biggest powder keg of them all, because it could cause huge disruptions. And I'm talking about the China-Taiwan situation. The People's Republic of China, or mainland China, sees Taiwan as a renegade province that is actually part of China, so they want reunification. Taiwan sees itself as an independent nation and they want it to stay that way. The US is pursuing a doctrine of strategic ambiguity. It does not recognize Taiwan as a country, but it also opposes forced unification. Whether and how the US would defend Taiwan in the case of a hostile takeover is not clear. Now, why is this conflict so relevant today? Well, one of the main reasons is that Taiwan has a unique role as the global center of advanced semiconductor manufacturing. The key company here is TSMC, or Taiwan Semiconductor Manufacturing Company. TSMC produces 90% of the world's most advanced chips, including critical chips for smartphones, AI, data centers, automotive, and defense. And many global companies such as Apple and Nvidia cannot produce cutting-edge chips themselves without Taiwan. This makes Taiwan a single point of failure in the global tech supply chain. China never managed to produce leading-edge chips, and it's incredibly complex to catch up in this space. The US benefited from Taiwan, and they have great economic relations. And of course, the entire AI boom that we keep talking about on this channel, that's underpinned by TSMC. If the AI boom comes to a halt because of severe disruptions in the semiconductor value chain, the world economy would suffer a huge blow. Trillions in stock market valuations would vanish, the US retirement funds would be severely impacted. It's hard to overstate the risk here. Here's an interesting chart. It shows how dependent the world is on Taiwan. For comparison, the left bar shows Europe's energy dependency on Russia just before the Ukraine war. And there's not much more than 20% of the energy that's coming from Russia. But when the Ukraine war started in 2022, this dependency alone caused huge supply chain disruptions and energy price spikes and ultimately economic mayhem. Then you look at Taiwan and how the world depends on them for semiconductors. So here, the global semiconductor reliance on Taiwan is more than 60%. And when we talk about advanced chips, it's more than 90%. So this is absolutely insane. Of course, the US would like to lessen their dependence on Taiwan, but that will take at least until the end of the decade. They're building a TSMC factory in Arizona, but as I said, it's actually super difficult to do that. Now, even without taking over Taiwan, China could block Taiwan super easily. Taiwan is extremely dependent on imports of energy. For whatever reason, they've scaled back their own energy production, and they're among the top 10 countries with the highest share of food that is imported as opposed to homegrown. And aside from China's rhetoric, it is also conducting military operations around Taiwan, a clear demonstration of power. Here you can see a graphic related to a 2024 operation, but also in late 2025, China conducted military operations. The Justice Mission 2025 was a large-scale military exercise around Taiwan in late December 2025, and it included simulating a blockade and invasion, so completely unapologetically threatening Taiwan. The US is selling arms to Taiwan, but it isn't clear how strong the US support really is, or whether Trump would focus on the Western Hemisphere, such as with Venezuela, while he leaves the Eastern Hemisphere to China. We just don't know. Now, if China were to take over Taiwan to obtain control over TSMC, it might not lead to disruptions automatically. Maybe the global supply chain remains intact. But given how China has been flexing its muscles when it comes to critical minerals, you cannot be sure. So this is one of the biggest risks in my mind. However, I am not expecting a hot war or a hostile takeover for the moment. China has shown that it can play the long game. It's not a democracy that has to plan in 4-year time horizons. Instead, it can postulate a grand vision and pursue that over decades. For example, in 2012, Xi Jinping started talking about his vision, the China Dream, which he set out to be achieved in 2049. China is a long-term society, but also a persistent society. So they will pursue their objectives, but they won't rush it. So what's going to happen? I believe right now it would be too risky for China to attack. Instead, I think they'll wait for the US to build up their own semiconductor capabilities, thereby lessening their dependency on Taiwan. And once that happens, there will be much less reason for the US to defend Taiwan, and then it might be a cakewalk for China. So to summarize, I think this is a huge risk with a very low probability in the short term. Okay, now we have one last bonus risk, and that is a wild card. I am, of course, talking about Trump threatening to take over Greenland, which now belongs to Denmark. Now, this is completely unheard of, seems more like the actions of a mad king. Denmark is a founding member of NATO together with the US, and they are long-term allies. But actually, Trump doesn't care. Now, it might be an absolute gut punch to NATO and Europe, but I think Trump is completely opportunistic. Europe is too weak to put up a credible resistance militarily, and according to Trump, the other NATO members haven't pulled their weight when it comes to holding up the alliance. And so if he takes over Greenland, there will be much whining and gasping, probably all around the world for a couple of years. But the US would obtain control over Greenland, including all its natural resources and geopolitical position in perpetuity. So it's almost like a monument to Trump. I think he can't do that, however. I mean, he's shown that he's willing to do a lot, but this could be the end of NATO, and then I really don't know what happens. The relations between the US and Europe would be disrupted for years or decades. But maybe there's an alternative route. I heard Trump is willing to offer every citizen of Greenland up to $100,000 if they accept to join the US. And so then it would almost be a democratic move. Yeah, he would be buying the votes in a way, but at least you can make the case that it is a voluntary move by the people of Greenland. Greenland has about 56,000 people, and so this would just be $5.6 billion. The US has posted a deficit of more than $1 trillion in 2025, so you could argue that this move would literally be less than 2 days of the US deficit. And if that works, it would be a great deal for the US, a strike to the Western Alliance, a huge embarrassment to Europe, but a great deal for the US. So let's come to a takeaway. What are we doing with all this information? Well, honestly, not much. The risks are the risks, but you never know when they will materialize. You can't predict the future. We know that market timing doesn't work. Also, the system is too complex and with too many interdependencies to accurately price any individual event. Now, you might be thinking, maybe I can't time the market, but I could make a sector bet. Maybe I bet on aerospace and defense. That's gotta go up, right? Higher uncertainty, more wars. Europe will have to spend more on military equipment. And in fact, the aerospace and defense ETF by iShares gained 70% over the last year, totally crushing the S&P 500. But that was a year ago. And what happened last year is no indication for what will happen this year. Smarter people than you have already put in their trades, pushing the ETF to a price that reflects its fundamental value, considering all publicly available information as of today. So, you're too late, and acting on outdated information won't allow you to beat the market systematically. So what can you do? Well, as the age-old wisdom goes, time in the market beats timing the market. The stock market has long-term positive expected returns, and you want to be exposed to it. The main consideration is your investment horizon. If you're investing for retirement that is 20 years or more away, you better make sure you're exposed to the stock market. If, however, you want to buy a house in the next 1 or 2 years, you better be cautious. Long term, the market will go up almost inevitably, but over the course of 5 years, the fluctuations can be huge, and you might want to adjust your risk profile. Okay, so much for the week. That's all I had to say. We're going to discuss interesting topics as they arise. I hope to see you next week. Take care and all the best.